Hey guys, what's up? Alec back with the daily stock market, and look at that. We have Tesla down 3%. It also got downgraded as a stock. So we're going to talk about if Tesla could go under $200 per share again. So in this video, we're going to talk about some of our favorite stocks. We're going to give an update on Tesla. We're going to give an update on Nvidia. Okay, it's a very scrutinized stock right now. A lot of people are talking about, is it overvalued? We're going to be talking about if it can go under $400 per share. And then we're also going to end the video finishing up an update with Apple stock, another beloved stock in the stock market. Apple stock's getting an upgrade. Some analysts are coming out and saying that they think that it could go to a $4 trillion market cap. Right now, Apple's on the brink of a $3 trillion market cap. Here you can see it's 2.94 trillion. And once it breaks above the $3 trillion market cap, Apple will be the first company to get to those valuations of a $3 trillion market cap. And it's kind of groundbreaking and historic to have the first $3 trillion company listed on the stock market. So yes, Apple is far and away at all-time highs. Back in December 2021, when the stock market was absolutely roaring, we saw Apple around 179, and then it had that huge sell-off to around 135, going back up to 172 and selling off again. If you're a follower of this channel for any amount of time, you know around $135 we were buying Apple very heavily. Okay, so stay tuned for an update on Apple where we think it could go. But let's start this video off with Tesla. And before we dive in, just smash the thumbs up button, leave a like on this video, share with a friend, and make sure you're subscribed on YouTube where you can find the full-length videos. So Tesla, all right, we see it down 3% and then an additional 1.3% after hours. Okay, in the last 1 month, we've seen a 40% increase on Tesla stock. Analysts were getting very bullish on Tesla stock over the last 30 days because of all the partnerships with Ford, GM, Rivian, and many more, also with the supercharger network. However, in the last week or so, we can see these lower lows being made and lower highs. So right now, in the last few days, 5 days of trading, we see a downtrend on Tesla, and it could definitely continue below $200 per share. Okay, so don't let anyone tell you that Tesla is just up and away from here. Definitely could trade under $200 per share again, so be prepared for that. And in my opinion, it's going to be a buying opportunity. I think around 180, 190 or lower is a good place to start loading up on Tesla stock for long-term investors, people that believe in Elon Musk and also believe in the AI development of Tesla. Because remember, Tesla is not just a car company. They're also a robotics company, an AI company, and an energy company, all pooled together in one. And if we scroll down, they have a huge market cap of 813 billion. So for Tesla to 2x to get around $500 per share or even $400 per share, it's going to take a lot of work and hard work and numbers and deliveries and revenue growth and net income growth to see Tesla at those valuations. So if you get in early around the 180 mark, I think that it'll definitely pay off. Because in my opinion, they will be a $500 stock in the future. How long will that take? It could take 24 months or longer. So be prepared to sit on Tesla stock for a long time. And the best thing to do with Tesla stock, by the way, is not try to time it and say, oh, this is the bottom, so I'm going to buy here. The best thing to do is just dollar cost average in. Don't even worry about the price. Don't even look at the price. If you believe in Tesla stock and it's your stock that you want to own for decades to come or even several years in the future, then just put a set amount every single week in the Tesla and don't look at what price it's at. That's going to benefit you the most, and it's been proven to do benefit people the most as well. Obviously, if you see a big dip on Tesla, it's going to be more beneficial to scavenge together as much money as you can, a little bit more than your dollar cost average, and put a lump sum, a bigger lump sum in at one time at around 180, 160 or even lower. We also see an article that says Cathie Wood says Tesla AI training ramp up will give EV maker a head start in robo-taxis. A winner will take most opportunity, okay, with huge margins. This is around 70% margins from robo-taxis, Elon hinted in May. And Tesla could easily be the leader and a winner take most opportunity in this robo-taxi future in the next decade could come to fruition. Tesla will be the first to roll out nationwide autonomous taxi platform if it's successful in ramping up AI training, says Kathy Woods. Right now, Kathy Woods and ARK is currently estimating Tesla to hit $2,000 per share by 2027, which is only 4 years away. With a bear and bull case price target at $1,400, that's the worst case scenario per share, and the best case scenario is closer to $2,500 per share. The firm assumes that the robo-taxi business will likely be a key driver, contributing 67% of its expected enterprise value and 64% of EBITDA in 2027. So it could be a huge, huge EBITDA driver for their company. And remember, they're only predicting this is 4 years away, which is very, very advantageous. Tesla CEO Elon Musk, in an interview with CNBC in May, explained how robo-taxis are a win-win proposition for car owners and the company. An average passenger car is currently used just 10 to 12 hours a week and remains idle the rest of the time the owner's home or at its place of work. He said by installing Tesla's autonomous software, these vehicles could be on road as part of a ride-hailing network, earning money both for the company and the owner, he said. The revenue split could be 50-50 or 70-30 in favor of the car owner, he said. So it's basically like being an Uber or a Lyft driver without having to drive at all, and you can be working your full-time job and still have a second job being an Uber driver because your car is doing all the work for you. Wow. So we already know about this, obviously, but it's becoming more and more closer to fruition with 2027 EBITDA expected 64% from this ride-hailing part of the business. So long term, there's things to be excited about if you're a Tesla shareholder or if you're just buying Tesla car and you're a Tesla car driver. Okay, and that will increase demand. Keep in mind, everyone's going to want to drive Teslas in the future. If this robo taxi becomes the main thing for Tesla and they are the winner takes all, everyone's going to want to buy a Tesla and just robo taxi their Teslas out. Okay, let's move along with this video before we end up talking about Tesla all day long. Okay, so next up is Nvidia, and they're up 39% in the past month also. Their stock has been boosted due to the AI demand, okay? Remember, they were closer to $275 per share just a month ago. They were around that price, $300 per share, okay? If we go back to a full year, they're up 154%. We were buying this stock under $150 per share. So if you've been following this channel for a while, congratulations on that. Swing trades in the close friends group as well. If you want to get in my private trading group, message me on Instagram. Thousands of positive testimonials now. When to buy. We take the stress out of not knowing when and where to buy. So we give alerts on swing trades, option trades, strike prices, expiration dates, and even long-term trading as well. Now, back in Nvidia, we can see that they are at a very, very all-time high right now. Their last all-time high was the bull market of 2021 that nobody can forget, and they were at $329 per share. They maxed out at. Right now, they're at $420 per share. So in my personal opinion, they're going to be trading under $400 per share once again. They're going to be trading closer to $380 per share. And I wouldn't be surprised if they end up briefly going below 300 down to like 375 or 390 per share. So my personal price targets, these are a little bit old, but we're going to stick 425 on here. And that's when I want to be buying the, 325 on here, and that's when I want to be buying the heaviest on Nvidia. And I definitely think that they will be going closer to that $380 per share. So here's an interesting article. Do AI chip stocks have more room to grow Nvidia and AMD are the ones in focus. Artificial intelligent semiconductor chips have been capturing investors' collective imagination, and for good reason. Together, they're driving the technology of the future. Semiconductor chips are ubiquitous in our digital age, and AI has in recent months begun transforming the way we communicate with our machines. The convergence of these two fields implies limitless possibilities. For investors, this is particularly exciting. The Philadelphia Semiconductor Index, the ticker symbol PHLX, which tracks the chip sectors throughout the performance of the 30 largest semiconductors makers, have gained approximately 39% already this year. And I bet a large percentage of that is due to Nvidia and AMD and some of the others. Okay, so let's scroll down. The question is now, do AI stocks have more room to grow? We can consult the Wall Street analysts. Several top stock picking pros have been weighing in on AI semiconductors, and their comments can shed more light on the sector. Let's take a look at what they have to say with AI chip related giants. So let's talk about Nvidia, a major name in the semiconductor industry, the eighth largest chip maker by revenue. Nvidia is a leader in the production of graphic processing units, GPUs. You will hear that a lot. So GPUs, remember that, and has built its reputation on these high-end chips. The chips are capable of handling the computing power needed of several high-end processing intensive applications, including professional graphic design, high-end gaming, and AI. Demand for Nvidia's GPU, especially in the latter application, has powered the stock strong gains for this year, approximately up 190 something percent. Okay, we already went over that. Recent data shows that Nvidia's performance is standing out in its AI products. OpenAI, the company that launched ChatGPT, has been using Nvidia's GPUs since 2020 in training its AI units to the tune of 20,000 chips. Looking ahead, OpenAI has indicated that it may need another 10,000 chips to maintain the ChatGPT efficiency from Nvidia. This is the firm foundation of Nvidia's success, and the company's strong position can be inferred from the solid beat it recorded in its recent Q1 financial results. This report showed a top-line revenue of $7.19 billion. While this was down 13% from the prior year, it beat the forecast by an impressive $670 million. The bottom line figure, a non-GAAP EPS of $1.09, was 17 cents better per share than had been anticipated. Better yet, from an investor's perspective, was the Nvidia's guidance. The company is predicting $11 billion in sales for its fiscal year Q2, a massive increase from its previous guidance of $7.2 billion. And if they achieve this, this will translate to a 41% growth year over year in its quarterly revenues, which is absolutely insane. This company, but remember, keep in mind, a lot of this is already priced in, and that's why we see Nvidia up so much. This company's strength in AI forms the basis from the upbeat comments of Morgan Stanley five-star analyst Joseph Moore, who writes, Nvidia should trade at a premium to its peers given the higher probability of upward revisions in the near term, but the multiple premium versus those of the peers has actually narrowed meaningfully. We do see continued growth in Nvidia data centers business in a multi-year trajectory that should be clearly above all of the other compute players on the composite basis, given there is no offsetting or cannibalizing compute business outside of the AI business. As a result, the analysts added that we see Nvidia as the cleanest story in AI hardware, and we believe it continues to deserve more consideration from investors looking for AI exposure, even if the current valuation construction and year-to-date stock returns already reflect expectations that are higher than the secondary or tertiary players. Okay, which we already know that this is already priced in, and that's why the stock is up so much. To this end, Moore puts an overweight rating on Nvidia, which he has to promote to be his top pick. In Moore's view, Nvidia will be $500 per share by this time next year, so 12 months from now, implying an 18% gain from current levels. Overall, Nvidia gets a strong buy rating from Wall Street analyst consensus based on 33 recent reviews that break down to 30 buys against just 3 that suggest a hold. The shares are trading for $422 per share, and the $464 average price target suggests around a 10% upside in the next 12 months. So overall, I think Nvidia is very similar to the way you want to look at Tesla. Dollar cost averaging for the long term is probably going to be the best way. But for me personally, I want to buy heavier at lower prices because then I'll have more stock. Instead of getting a 10% return, which I really don't care about, the risk versus reward just isn't there for me for 10%. But for example, if Nvidia goes to 380 or even $325 per share, the risk versus reward will be a lot more favorable for someone like me and probably you as well to be buying Nvidia at those price points. And that's just how I look at it. Obviously, dollar cost averaging over the next few months is going to be the best thing because nobody can predict exactly what's going to happen to Nvidia. But in my personal opinion, I think it will be around $380 per share once again before it goes higher than $420 per share. So in the next 12 months, the analyst can be right and it can go to around $500 per share. But before that happens in the next few months, I think that we will see $380 per share once again. And Apple, we'll just do a quick update with them because we are running out of time here. We see Apple up 8% in the past month, 17% in the past 3 months, 33% in the past year. Okay, in my personal opinion, I think that Apple will dip down closer to $165 to $175 per share. Once again, right now the support's closer to 175, so keep your eyes on that level. If we see Apple break above 3 trillion, get ready to see a lot of headlines and a lot of bullish things on Apple that they could go to $4 trillion next. Right now, we're even seeing articles that are saying Apple analyst says that stock could bulldoze its way higher to give the company a $4 trillion market cap by the end of 2024. Apple closed above prior resistance level of $183 per share for the second straight week in a row, confirming a bullish long-term trend. The company is entering a seasonal strong period and is expected to benefit from key hardware launches, including the iPhone 15, which launches around September. So make sure you keep an eye on that. We'll obviously do another update before that. We'll probably do another update next week. So make sure you're subscribed with post notifications on. Comment what you think on Apple. Will they hit a $4 trillion market cap? Will they be the first company to a $3 trillion market cap? Want to join my close friends list on Instagram and Discord, make sure you message me at the Daily Stock Market on Instagram. Now over 204,000 followers and over 1,000 positive testimonials on our success story. So feel free to click on success number 9, success number 8. Read through some of those positive testimonials. We see many students up 14%, which translates to a $2,000 gain in just one day. $500 made, and the list goes on and on. So feel free to read through some of those testimonials yourself. Now over 1,000 total testimonials. Thank you guys for reaching the end of the video. Message me on Instagram if you want to see more about the close friends list and to read through my website. Thank you guys for all the love and support. Share this video with a friend if you think that they will find it helpful. And leave a thumbs up, subscribe on YouTube, the only place to get the full-length videos. And I'll see you guys in the next video. Remember, don't time the market, buy the market. Peace.